In 2008, the financial world teetered on the brink, and at the helm of the Federal Deposit Insurance Corporation, Sheila Bair navigated a crisis that could have cost millions of Americans their life savings. Her steadfast leadership during that period cemented her reputation as a formidable advocate for financial stability and consumer protection. Now, Bair is back, sounding the alarm on new threats to personal wealth. Her latest book, How Not to Lose $1 Million, tackles the pervasive issue of financial illiteracy. It highlights how poor decisions, often driven by a lack of understanding, cost individuals significant portions of their net worth. Bair emphasizes that these aren't just mistakes made by the uneducated. Even sophisticated investors can fall prey to complex schemes or simply neglect basic financial hygiene. One major concern Bair raises is the speculative nature of cryptocurrencies. She views them as high-risk assets, often lacking the fundamental backing or regulatory oversight that traditional investments provide. The allure of quick riches, Bair argues, frequently overshadows the inherent volatility and potential for significant losses in this unregulated market. Another area of concern for Bair is the rapid rise of buy now, pay later schemes. While seemingly convenient, these services can mask the true cost of purchases and lead consumers into unforeseen debt. She warns that the ease of deferring payments can encourage overspending, eroding financial discipline, and making it harder for individuals to manage their budgets effectively. Bair's message is clear. Financial literacy isn't merely about understanding complex instruments. It's about making sound, disciplined decisions that protect your capital over the long term. So what does this mean for you? Here's what to do with this. First, review your exposure to speculative assets like cryptocurrency. If it exceeds 5% of your total investable assets, consider rebalancing. Sheila Bair's experience during the 2008 crisis shows how quickly seemingly stable markets can turn. Second, audit your use of buy now, pay later services. Calculate the total outstanding balance and the payment schedule for all active plans. If the sum exceeds 10% of your monthly discretionary income, pause new purchases until you reduce that liability. Finally, read the fine print on any financial product before committing. Bair's emphasis on financial literacy isn't about avoiding risk entirely, but understanding it. Take an hour this week to read one contract you've signed recently, whether for a credit card or a new service.